The Indian market opens at record high levels, fueled by the exit polls that predict a landslide win for the current government. Nifty crosses 23,300 for the first time. The Nifty Bank 2 crosses the 50,000 mark, and the Midcap index at a fresh record high as well. It's the PSU stocks that rally as the street factors in policy continuity for another 5 years. REC, PFC and Power Grid are the top gainers in that index. Other beneficiaries of the likely continuity in the government policy are defence and infra stocks, also surge as the exit polls boost sentiment. Adani Group stocks too surge after exit polls predict a big win for the Narendra Modi-led government. Adani Ports and Adani Enterprises are the top Nifty gainers today. We also have the auto stocks in focus, all of them gaining despite mixed sales in May. M&M races nearly 5% despite passenger vehicle sales coming in below estimates. Tata Motors also climbs as EV sales dip. Ashok Leyland as well rallies. Good morning. You're watching us here on Chartbusters as the market opens at record highs. Bulls take charge on D Street. I'm Mangalam Malu. Joining me as always is Nigel D'Souza. But what's not as always is the fact that he's not here with me in the studio. Instead, he's at the Bank of America conference, which is currently underway. Nigel, you know, on days like this, we don't have to do much describing of what's happening. The market itself is doing all the talking. 3% move on all the frontline indices. PSUs doing well, auto stocks doing well. We have the infra and power stocks doing extremely well. 1,800 stocks declining, advancing for about just 300-400 stocks which are declining. The India VIX, which has been spoken of with so much intensity over the last couple of weeks, down 20% as well. I think not much left for description.
Well, that's right, Mangalam. You know, what a day. It's a bit of a bazooka day, right? The markets are celebrating that we are bracing ourselves for Modi 3.0. And, you know, the basket that you were talking about, the PSU basket, you know, just a few years ago, the entire market capitalization of put all those companies together was around 15 lakh crore odd. It's moved to more than 50 lakh crore. And just going by the moves, well, the street believes there's plenty left in these stocks as well from here on. So that's the big pocket of there. SBI, one of the big gainers. Power Grid is firing away. Coal India as well, a few of the stocks that I'm looking at. But it's clearly a day that you wanted to participate on the upside. And for those that carry long positions, well, it's been a marvelous Monday, so to call it, Mangalam.
Yes, Nigel, a marvelous Monday indeed. But, you know, just one thing, you're out a perfect time to actually get in a sense of what's happening on the ground. What are your conversations off the air like out there?
Well, Mangalam, you know, I've spoken to quite a few global-facing investors over here. I know the big takeaways are that the next decade belongs to India. You know, that's the big theme out here. They are happy to see continuation with regard to the current government, and they're expecting reforms going ahead as well. One word of caution is you don't want any kind of tinkering with the tax rates here, you know, in terms of short-term capital gains. But in terms of way ahead, the focus on capex, which as we have heard earlier, is the multiplier effect, and that's what will hold us in good stead. Just a word on caution in terms of the employment data that's coming out of that, and we'll play a couple of those sound bites as well. But otherwise, the buoyancy on the Indian markets is well and truly on. And the FIs, you know, we'll need to see how they come back, because as we've been mentioning, Mangalam, since the morning, that getting into this event, they were actually right. You could blame it on the emerging market phenomena, but they are down close to $3 billion in this year so far. So we'll have to see whether or not that turns back. But otherwise, plenty of optimism on the India story. And Mangalam, I'll tell you what, we are lucky to be part of it, because it appears the next 10 years belong to India as, you know, the GDP of the country goes up multiple times. So good time to be in India, good time to be investing. Keep your SIPs going. The Indian investor actually has been showing a lot of maturity out there in terms of inflows. And it wasn't actually the domestic money that was doubting this election verdict. It was actually the FIs. So they'll have to, you know, change things around a little bit, Mangalam.
A perfect time, as always, to be in India right now. As Madhu Kela pointed out earlier as well, this is not a time for income generation. Instead, it is a time for wealth creation itself. The next 10 years definitely belong to India. If the last 3 years are something to go by as a trailer, maybe the film promises a lot more. As they say, a picture abhi baki hai. But let's talk about a lot of individual stocks now. We've been going on about the market and the focus on India as a big opportunity going forward as well. So let's get bottom up. We have Coromandel International. After it introduced a number of products to enhance crop yields. So to understand how these new launches are likely to impact their business, we are now joined by Raghuram Devarakonda, who's the Executive Director at the company. Thanks a lot, Mr. Devarakonda, for joining in. You know, we looked at your quarterly performance. The revenues were down about 28%, but the EBITDA was lower by about 32% as well. That's what's happened before. Let's talk about what's looking like in the near future. In the first quarter itself, you've launched 10 new products. Will they start contributing to the revenue in FY25? If yes, then what's the outlook that you have from this year for the company and these 10 products in particular?
Yeah, thanks for having me on your show. Yeah, absolutely. I think, as you might have noticed, the monsoons are set in just about on time. And at least in the southern part of the country, it's a pretty comprehensive coverage in terms of, the clouds and stuff like that. So the external environment is auguring well. And we have timed these launches just at the, Kharif period so that we make take full advantage of that. And not only that, I think we need to be mindful of the Indian farmer and make sure that all these products, provide the kind of benefit that the farmer is looking for, in the form of cost-effective solutions that solve his problems while improving the yield. So the nature of these 10 products are quite innovative, and we are very proud to have launched them. And many of these are likely to do well for us and for the farmer in India.
Okay. All right. Hi, sir. Good morning and welcome to the show. This is Nigel on this side. We're looking for a couple of numbers. So these 10 products that you've launched, what kind of revenue contribution could they scale up to? Say in the near term, say in the longer term, if you have a number out there. And since 5 of these are generic formulations, will there be some pricing pressure or you don't see that as a risk?
See let me pick up the 5 generics point first and then come to the projection for the year.
Okay.
So in our portfolio, one of the things that we have tried to do this year through these launches is to make the portfolio more balanced. As you may be aware, the herbicide portfolio, albeit it's just 20-25% of the entire market, it's growing very rapidly because of the shortage of labor, the farm hands. So it's a huge area. And in our portfolio, we are pretty heavy on insecticides and moderately okay on the fungicides. So what you will see in this 10 products that we have launched, it has herbicides, and 3 out of the 5 generics are herbicides. It's more of a catch-up game for us at the moment, just to make sure that our portfolio is well balanced. And we also have a couple of fungicides in there. Now, with regard to the overall percentage that we are shooting for, historically, we have had a very good track record. And this year, we are betting big on some of these products, particularly the other 5, which are novel or unique. And these are combination products. That's another factor that I would like to emphasize. So in this scheme of things, if you do a solo product, the chances of developing resistance is quite high. So the trends right now are to launch combination products. And these combinations are what we are launching in the other 5. And either they are novel in terms of new molecule altogether, and or combinations. So
that still doesn't answer our question. What is the kind of revenue contribution that you project from these products?
I'm coming to that. This is just to help the audience understand the basis for giving a number. So the 5 non-generic ones are fairly novel, and therefore the potential is quite huge. There will be no pricing pressure that you alluded to, unlike the generics. So the overall revenue that we anticipate to generate in this financial year, I'll only give you in percentage terms. I think you'll allow me to do that. About 15 to 20% of our total revenue we anticipate coming from new products.
All right, 15 to 20%.
Yeah.
Yes, 15 to 20% revenue comes in from these new products. Perfect. That's your anticipation. And the overall revenue itself, what are you gunning for in this year for the company?
See, we anticipate the volumes to be good because of the monsoon. However, there is significant pricing pressure because of the Chinese overcapacities. So I think let the first quarter go by because the Kharif season is about to set in. Maybe I'll be in a better position to give you a specific answer somewhere middle of the year.
All right. So if you could give us an answer on the volume front at least, prices are what the market will take. What's the kind of volume growth that you're gunning for this year?
So historically, as I said, I don't know if you have read through our financial things. I mean, the announcements that we made about the last financial year, we grew by a handsome 21% in volume terms.
Yes.
So we expect, to sustain something of that order in as far as the formulation sales are concerned, at least in the country.
All right. What about the products which are patented and launched in partnership with ISK Japan? I mean, just wanted to understand what of these launches are in partnership with them and what's the revenue share with regards to them?
So there's one product, the brand is called Prachand, and this is for the rice crop. And it's a pretty tough pest that we are trying to control through this launch. And it has developed a lot of resistance to many of the products that are out there in the market. Now, this is a novel molecule that has been brought into the country for the first time. So as you might have, if you were to draw a parallel with antibiotics, the resistance gets developed because of prolonged use of some of these chemicals. And similarly, the same thing happens in pesticides as well. So this product has been tried and tested, on a large scale, and it is doing a wonderful job. And therefore, we anticipate this to be a flagship product as far as the basket of new products that we have launched. So it's going to contribute to a significant chunk of the 15-20% that I mentioned about the revenue that we are planning to get in this financial year from these new products.
And what would be the revenue share with ISK?
Yes, yeah.
What proportion? What percentage will you share with ISK?
No, ISK builds us and we sell on that. So that's the arrangement we have. It's more of a supplier, customer kind of a relationship.
Got it. Thank you so much.
Yeah.
Right. Thank you so much for joining in, and giving us the outlook for this year. Though we would have liked, some more clarity on the pricing front. But like you said, things are moving. So maybe sometime in the middle of the year, we'll get a lot more on how the Kharif season has panned out. And more importantly, what you're gunning for in terms of growth for the next year itself. Last year, the volume growth was over 20%. Pricing, of course, came under pressure because of the industry. Wish you good luck for the remainder of this year.
Thank you so much,
Mr. Devarakonda.
Thanks for having me. Bye-bye.
Right. With that, we'll take a short break. On the other side, we have the management of Gateway Distriparks. Prem Kishan Gupta, who's the chairman and managing director, joins in to discuss the quarter gone by and the year ahead. Welcome back. You're watching us here on Chartbusters. As promised, let's get chatting with the management of Gateway Distriparks as well. The company is on our radar as in the fourth quarter it saw muted results on account of the Red Sea crisis, but the management is hopeful of growth coming ahead and, coming in from India itself as the company is expanding their network and sustaining growth. Mr. Prem Kishan Gupta, who is the managing director, joins in as always. Thanks a lot. Always a pleasure speaking with you, Mr. Prem Kishan Gupta. Let's start with the outlook for FY25 because FY24, you had an earlier projection of 10 to 15%. Understandable that you could not meet the volume guidance because of a lot of the external factors which were there as well. So if you could give us a sense of what is the volume target that you're gunning for in FY25 across both your rail and CFS verticals.
Good morning, Mangalam. You rightly said that the results are muted and it is mainly because of Q4 where the rail volumes went down and the CFS volumes were stable. So as a result of that, our revenue and EBITDA both have come down. But rail, if you look on a year-to-year basis, then the rail business has gone up by 6%. And CFS has remained flat, but CFS has contributed negatively in the revenue and the profitability. I have always maintained that CFS business is not that we are focusing on, or it is not something that will continue to give us profits. It is the rail business. And in Q1 of this year, we started slow, but there is a upside tick coming in now. And we are hopeful that the supply chain disruptions globally will now settle down with now people estimate the delays that come in, the delays that due to transit time, so they can expect their cargo. They will have more visibility than than it was earlier. So our guidance for the FY25 is at least 10%, and we'll try for more. This is without any addition to the new terminals.
So what is the guidance that you have for this year in terms of volume, sir? And if you could also at the same time give us a sense of what kind of EBITDA per unit are you looking at for both your verticals? Volumes and EBITDA per unit.
So volumes, CFS will remain flat, but rail business will be 10% more. And the EBITDA that we earn at CFS is on a annual basis, it is coming out to 1,500 rupees per TU, but there was some one-offs in the Q4. So that is why in absolute terms, Gateway CFS business has contributed negatively. Rail, we are minimum that we think is in 10%, but we might go up to 12 to 15%.
Okay, all right. Hi, Mr. Gupta, but you missed out the EBITDA per unit. What is it likely to be for your ICD business?
See, for our ICD business, our annual average was 9,500 rupees per TU. And in the last quarter, we even went up to 9,900, which is Q4 24.
Correct.
So we maintain our guidance for the EBITDA to be in the range of 9,500 to 10,000. This quarter, the double stack activity was less. And because of that, double stacking went down from 40% to 35% because of low volumes. And because of that, there was a revenue, went down by 2.5 crores.
Okay, all right. Just to reconfirm, Mr. Gupta, you are gunning for a 10% volume growth with the EBITDA per ton at 9,500 to around 10,000 rupees. We got that. And this 10% volume growth doesn't include the Jaipur ICD, right? That will be incremental.
No, it does not include Jaipur ICD, which will be there in FY26.
Doesn't. Got it. Okay, so you're not counting anything of that. Basic question, Mr. Gupta. On a valuation basis, you have comfort, but the numbers are not really coming. So a basic question, give and take everything. And EBITDA per quarter, can you do around 100 crores, which annualizes at around 400 crores? Is that possible?
We were doing almost the same, except for Q4. And in Q4, there were, like I said, in the CFS business, we took one-off expenses of 6.7 crores. And on the rail side, the double stacking was less. So because of that, the revenue was less by 2.3 crores. So roughly about 9 to 10 crores have gone as one-off expenses in the last quarter, which will not be there going forward. So we are quite hopeful of retaining these EBITDAs, and with this increased volumes, our aim is to go over even 100 crores per quarter.
All right, that is something that the street would then like if you manage to consistently go over 100 crores per quarter in terms of EBITDA. Apart from the business that you are in, what's stood out in the last 12 months is you having dramatically increased your stake in Snowman Logistics. 4.99% is what you were allowed as a promoter without an open offer, and 4.99% is what you've done. Now that we are in the new financial year, I wanted you to tell me whether you are comfortable with current levels or you want to go all the way up to 51%.
We would ideally like to be over 50%, and we are working towards that because our net debt has come down. one thing from 337 crores to 277 crores. Company is generating cash, and Snowman has started doing very well. Like you must have seen those results.
Yes.
And we expect the growth to continue over there. So we would like to increase our stake in that company. There is no doubt about that.
All right. And finally, with the capex plans that you have, you also last time said that over 500 acres of land is what you have, and you were considering ways and means to, monetize that. What's the update on that before we let you go?
See, we have monetized 20 crores of the land and warehouse in Krishnapatnam, though it goes to the associate company Snowman, but because of the demand over there for the seafood, they have got a ready facility with the warehouse, so it will not take much time to convert that into the cold chain. So 20 crores has come in, and we continue to look at selling the rest of the land and infrastructure in Krishnapatnam, because the CFS there has no business because the port has stopped the container handling at Krishnapatnam.
All right. Thanks a lot for joining in. We will keep speaking with you. Hopefully, the next time we speak, the EBITDA would be over 100 crores per quarter, as you've spoken about. And maybe things would look a lot better on the double stacking and the volume front, domestic and internationally as well. Always a pleasure speaking with you. With that, we'll take a short break. On the other side, we get more on the stock-specific action and the markets on the whole. Welcome back. You're watching us here on Chartbusters. There's nothing incremental to add on the market apart from the fact that it continues to bust the charts. 2.78% in terms of gain for the Nifty, near 2,000 point gain on the Sensex, holding above levels of 76,000. Understandably off the morning highs, but the levels at which you're holding are still significantly higher than where we left the markets on Friday. It's the same stocks which continue to build onto those gains. It's the PSUs and defense stocks along with manufacturing stocks which are doing extremely well. So what we'll do is leave it to the team of Trading Hour to take all the market action and macros forward.